In the past 18 days,
Mhm.
the U.S. national debt has gone up $444 billion in 18 days. At that pace, it would be an 11 trillion per year deficit added to the national debt. It took the United States until March of 1975 to accumulate 500 billion, and we just did that in the last 18 days. Since we
Crazy.
raised the debt ceiling, we have accumulated roughly 2 trillion in debt since we have raised the debt ceiling. It took us over 210 years to do that. So the value of the dollar, the more they print, the less the value of each dollar in circulation is worth.
Right.
And so you print more and more and more and more, and the dollar becomes worth less and less and less and less. And that's the reason to get out of the way of the dollar and its massive printing, which will never end.
Right.
Look, we have a 32 trillion, $33 trillion debt, but we have 130 trillion in unfunded liabilities that aren't counted in the debt. Medicare, Medicaid, Social Security, government, military pensions. We have 155 trillion in debt with only 5 trillion in assets. That's according to the US government. The biggest asset, 1.4, 1.5, 1.6 trillion, 40+% of our asset base is student debt. There's your why. A trillion seconds ago, 31,688 years ago. There's your why. If I had a choice, I'm buying American Eagle gold and silver.
Okay.
And I think that is, at least by half of the states in this country, considered to be money now. And the way the law reads is it says the melt value of the coin plus any market premium. So at some point, people will become keenly aware of the market premium. But look, this is, thank God for these states, a little bit of a pushback against the changes that are being forced down our throat, like a central bank digital currency, and which is coming by 2025. And
sure it is.
That's what the BIS, Bank of International Settlements, mandates. Everyone has to have one by 2025. So gold and silver are assets that are not simultaneously someone else's liability. They have no counterparty risk. Being your own bank, being your own IRA, being your own annuity, and not relying upon a system that is over leveraged, is undercapitalized, it is extended way too far and approaching the end game. So for me, you make it very simple. You buy 1 ounce gold eagles, you buy 1 ounce silver eagles. If you want some fractional gold eagles, fine. They come in half, quarter, and 10th ounce. Make it simple. And you will have the most sought after liquid gold and silver coins in North America that have immediate non-subjective liquidity wherever you are. And in where we're going, to me, Todd, that's the best you can ask for. I think you ask yourself, first of all, let's make one declaration. To me, gold and silver are wealth. They are not an investment. They've outlived German hyperinflation, the Great Depression, anything and everything the world has ever thrown at it. When I accumulate gold and silver, I've been doing it every 2 weeks for 33 years. That was the promise I made to my dad when we started our company. You'll buy something every 2 weeks. That's the only rule. Cool, I said. Well, that was 33 years ago. It was the best gift he ever gave me.
Yes.
Taught me how to use the laws of compounding for me instead of against me. So I look at gold and silver as wealth, first and foremost, not as an investment, but I would work backwards. What exposure do you want to a system that is 155 trillion in debt by the government's own admission, with only 5 trillion in assets, the largest asset, 40%, being the debt of our children? You strip that out, we have 3.5 trillion in assets, being land and military primarily, against 155 trillion in debt. Gold and silver aren't just commodities. A bank like JP Morgan, or a sovereign entity, maybe a sovereign wealth fund on behalf of the Chinese government, they sell short into the paper market and buy up the physicals around the globe at pennies on the dollar. Well, not in China, though, because it's $115 an ounce higher than it is in the West. And so what they're doing is they're trying to gobble up all of the physicals slowly and methodically, not too fast. The London Metals Exchange lost 95% of their zinc and 75% of their aluminum last year alone. So you have big traders around the globe who understand we are moving into a period of time that will be dominated by commodities and not by debt instruments and promises and IOUs. And the big money around the world who understands where we are going are using the suppression of the leveraged futures markets of the West to not only suppress the paper price, but to misdirect the masses which allows them to stand for delivery at subsidized prices. And this will continue to happen. They're playing the paper game by suppressing the paper price and then accumulating everything that's not nailed down. And that's why you see shortages at the top. There's great availability and low premiums down here right now. But that'll change, because if the big industrial size gold and silver bars are being delivered off the exchanges, and guys like Ted Butler say it's a massive shortage at that level, the trickle down effect is not far away. When you see the central banks buying at such a voracious pace, when you see gold at $115 higher in China than it is in London or the United States, when you see central banks increasing month over month over month over month, it's just a matter of time. And that's why I find it so ironic that at a period of time when availability should be poor, premium should be high, it's the inverse of that. It's the best availability and the lowest premiums we've seen in over 3 years. And yet the world is getting, in my opinion, far more complicated and far more frightening. And maybe that's exactly why the central banks are suppressing the paper price, yet accumulating the physical. After all, what did the Bank of International Settlements say in April of 2019 to the central banks and to the world, if you were listening? And that is, oh, by the way, gold, we're going to levy up to the only other tier one reserve asset in the world. There's a term I've become very fond of. It's called logarithmic decay. Little by little by little by little by little, then all at once. It's like going over the falls. Where are we? It's the game of Jenga. Where are we in this pathway, this progression of events before we hit the falls? This little by little by little by little, then bang, we wake up on a Sunday night and China has the price of gold at $500 an ounce more than the West, and silver at $50 or $80 or $100. And bang, like that, everything that is not nailed down across the globe immediately goes to that arbitrage.
Right.
And we wake up with nothing left. And there's an old saying, Todd, and that is, he who has the gold makes the rules. So
Right.
the more things change, the more they stay the same. And I think that's where we're heading. All the headlines that we read in the jobs reports that just came out show that we added 336,000 jobs in September. Woo. But over the last 3 months, full-time employment in the United States is down 692,000.
Yeah.
So you have, over that period of time, 1.2 million part-time jobs, but we lost 692,000 full-time jobs. So benefits and pay are not commensurate with the increase in the cost of living.
No.
And when you have a government that lies about the CPI, they exclude things like food and energy and housing in the CPI measurements.